Great. So if you don't know who I am, I'm the founder and CEO of AlphaCore. And you've heard some incredible speakers today. So I want to just talk about what we are doing at AlphaCore and how we're bringing this all together for you. But I encourage you all to talk to each other because there are some incredible people in the audience and in the room together. So not only do we have great speakers on the stage, but please reach out, talk to each other. You'll probably find there's very small degree of separation between a lot of you in this room. Also, I just want to reiterate that we are going to give away this Gibson guitar. So does everybody remember Back to the Future, the movie in 1985? Does everybody remember that? Okay, in the movie, Marty McFly plays this guitar, right? And you can see his arm disappearing. Do you remember that? So this is that guitar. It's not the exact same guitar because that would be a little pricey, but it is it is the same guitar. And if you fill out the survey, so if everybody get your phone out, please get your phone out. If you haven't already scanned this, scan in this QR code, so you can see it, and fill out the survey after I speak because that's when you're going to rank my speech as the best speech, okay? But that, to enter, to win this guitar, you have to fill out the survey. So please do that. We actually really want you to do it because we want to know what to do next year for this event. Any suggestions you have, please let us know. We're going to take those seriously. So I want to talk about who's in the room. And can you lift the house lights up? Can we just bring the house lights up for a second? We'll bring the house lights up. But I'm going to click through this. And if you are a part of this group, please stand up, okay? Do we have any entrepreneurs in the room? Stand up if you're an entrepreneur. Do we have any veterans in the room? First, give them all a round of applause. Do we have any educators in the room? Do we have any philanthropists in the room? How about community leaders? All right, now I'm going to go to the other side. Anybody representing these industries, please stand up. Medicine, biotech, real estate, law, technology, investments. It's probably going to be the entire room, right? So just realize this is who you're sitting next to and ask them a question. Ask them how they got introduced to us, how they got introduced and invited to this conference. But what I would say is like what I learned from all these artificial intelligence speakers, because we hear a lot of them, right? We hear every research analyst will call us, every product provider. They talk to our research team. They talk to Eric Gerster, David Stubbs, Madeline Hume, Johan Lee. Our entire research team gets inbound calls and how the world's going to be changing. What I realize all the time is this won't change. In fact, I think this interaction of humans is going to become more and more important. And we actually see that happening. Every year we do this conference, it's gotten bigger and bigger and bigger. And people find that human connection more important every single day. So there's certain things that I believe are not going to be replaced by AI. Obviously, there's going to be a lot of things that will be, but this human interaction, that's not going to change. And one of the human actions that you guys have every day is the team members that we brought together at AlphaCore, and these are probably the reasons why you came here. So can you bring the house lights up one more time, Nicole? And this I'll ask you to remain standing. So if I read your name, please remain standing. Mark Seward. Brian Habus. Trevor Cowan. Carl Adams. Kirk Strawn. Brian Marvin. Aidan Walsh. Eric Gerster. Tim Cowan. Joan Koss. Brett Roenick. Chris Willingham. Danny Connors. Mike Crawford. Brandon Bowl, Johan Lee, Jonathan Ellsbury, Chris Maudlin, Stephanie Williams, Christina Cagle, Hank McClurg, Huck Gibson, Kyle Kraus, Mike McGreevy, Nate Stewart, Brennan Cobb, Ed DeRica, Noma Hendon, Rob Mikulski, Sam Jones, Ryan Callan, Walter Murphy. These are your advisors at AlphaCore, and these are really the reason AlphaCore has been successful. Now, I want to introduce everybody else that's part of AlphaCore. You please stand up. Everybody else. So a lot of people worry that as a firm grows and continues to scale, that they're going to lose the human connection and they're going to lose their customer service. And I can assure you, you're not with this team. They are amazing, and we're going to continue to add more and more amazing people. So please give them all a round of applause. And you have to keep standing. You don't have to keep standing while you're... You can if you want. So we're going to go forward here. All right. One more thing. So David Stubbs talked about this earlier today. And for a lot of people, when they hear the speakers that we've had, they get a little lost in some of the terminology or the jargon. We're here to help make sense for you. We're your interpreters for you, and we're your quarterbacks. So when we do planning, financial planning, or estate planning, or charitable giving planning, we're going to do all that for you one-on-one in conversations. And then we're going to tie that to the investment side, which you heard a lot from today. Now, we think we do this better than anybody. We've brought institutional quality planning in combination with institutional quality investments. And we believe to stay ahead of everybody else that's out there, you've got to do that. And you've got to have the right people and the right technology together. But a lot of people want me to tell the origin story of AlphaCore. And it is truly, people will wonder, what is that? Well, it's a beautiful, beautiful slide, isn't it? So this is from February 6, 2015. AlphaCore was launched in 2015. So we've been just over a decade together. I've been in the industry for about 32 years now. And I was a part of a group that actually sold a business, and I had a liquidity event myself. And I was looking for a wealth advisor. So I went out and looked for advisors and met some great people that did planning fairly well. They gathered information, they did cash flow analysis. They told me to set up 529s for my kids. They said, let's set up trusts. Let's put together those fully fund IRAs. All the things that we do from a planning perspective. And then what they would tell me was I need to earn a return stream so that I don't outrun my cash, I don't run out, right? So usually that return stream, if you'll hear this, is usually between 8 and 12%. Sometimes more, sometimes less, depending on who you are. And what the answer was, this is back in 14 when I heard this, the answer to get those returns was to put 60% of your money in stocks and 40% of your money in bonds. Has anybody ever heard that before? That's the 60-40 thing, right? 60-40. And then you've probably heard this too. There's a glide path. And as you get older, we'll give you less equities. We'll give you more fixed income, right? We'll just kind of dial it down. And that's been the model for many years, especially since the 80s. But when interest rates were zero, and everybody remembers this, right? So if I had put 40% of my money in a zero rate environment, I would have been diluting my portfolio, but also risking my portfolio, right? Because if rates rose, which they did in 2022, you'd lose a lot of money in fixed income. As rates goes up, fixed income goes down, right? And then in equities, I had lived through 1998 long-term capital management debacle, the Russian ruble crisis. Anybody remember that? 1998? Lived through the tech wreck where equities lost 50, 60, 70%. Then I lived through the 08 crisis, which we talked about earlier. I lived through 2020 COVID. I've lived through now 2022, re-rating the environment. So I've lived through all these things. So to me, that 60-40 portfolio was actually too risky. And you're going to be like, well, what do you mean? You're talking about alternatives and venture and all this other stuff. So what I did is I wrote down with my wife, I said, here's what we're going to do with our portfolio. I drew a circle. And I said, in the center of that circle, we're going to have a diversified portfolio of private managers, so private credit, private equity, long-short equity, private real estate, global macro. So a diversified core of managers that are trying to beat the market year in and out, regardless if we're in a bull or bear market. And that'll be anywhere between 10 to 30% of our portfolio, depending upon the market environment. But around that core, the lion's share of our portfolio is still going to be in long-only stocks. So I still believe very much in innovation and creativity, and that's where the long-term money should be anyway. That we'll call beta. Same thing when interest rates rose again. Well, we can put treasuries, we can put muni bonds. We can capture that too. That's beta of the fixed income markets. So by and large, most of our portfolios have beta, stocks and bonds. But for those times where there's a crisis event, where there's something that sells off, or there's something unexpected, or a fat tail event, which you hear about all the time, they seem to be happening more frequently, you have this core. And so my wife, who's an attorney, she saw this and she said, well, if you're going to launch a firm, don't name it after yourself, Pfister Financial or whatever. So name it AlphaCore. And that's where the name comes from, alpha at the core. So what happened since then, though, is I said, okay, well, if I'm going to be a client, so we were the first client of our firm. And I said, that's great. Investments is awesome, and planning is awesome, but that's just touching the tip of the iceberg, right? So these are the two things that most people think about when they think about wealth advisors. With tax planning, wealth planning, investments. But there's a whole host of other things. And so as we've continued to grow, we started adding, how do we give you legacy planning? How do we do that? Who are the people that can actually deliver that information, have the sit-down conversation with you and your family? How do we offer estate and insurance planning, right? How do we offer banking and lending to our clients who might need pledged asset lines, or they need margins, or they need mortgages, right? How do we offer concierge personal services to you and your family? And we're going to talk about it because David Stubbs is going to come out and do a Q&A with me. And then what about governance? Governance of your family, talking to your kids, raising your kids in a world of wealth. Trevor's going to talk about it later. So to me, these are things that we had to keep adding. And as we continue to grow and add more people, this is why we're growing, because we think there's other service that you, as clients of ours, deserve to have. So now we have people across the country. So obviously we're here in San Diego, and that's the lion's share of our team is here, the lion's share of our client base. But we also have a big office in Denver. We have Austin, Texas. And so we're going to continue to expand where our clients are. We're going to meet where our clients are at. So you're going to see that happen over the course of the life of AlphaCore. Does anybody remember these slides from earlier? So these slides I drew myself right after I drew the notebook paper for my wife. And the reason I did this is I actually had one of my clients who was actually a football player at Michigan. There's a football theme going here, but he played football at Michigan. Then he lived in Michigan, and he started the largest coupon manufacturing company in the world. It was called Velasquez Coupons. So all those annoying coupons that follow to your newspaper, that was his company. And in about 2005, he sold that company. He had a large liquidity event. And he called me up and he said, Pfister, he would call me Pfister all the time. He's like, Pfister, I'm in the end zone. Don't ever put me on the 20-yard line again. And that was his mentality. He's like, I got a lot of money. I don't need to take huge risk. I don't need to lose 50% to try and make my money back, right? And that stuck with me as we started to build AlphaCore. And if you look at the math behind that, right? So if you have $1 million and you lose 50%, you have $500,000, right? So now you have 500 grand. So just to get back to break even, 500,000 to get to $1 million, you have to hit a huge home run. You have to make 100% on your money. Does that all make sense? So if you just lose less, then you won't have to start from such a low base. You'll be able to capture new highs. So this idea of winning more by losing less is just simple math, right? So if you look at these, and David mentioned it earlier, a 60-40 is the brown line here. The blue line includes 30% alternatives or private markets. The big difference is in the tech wreck, you just didn't lose as much. So then when the market rallies from 03 to 07, you're ahead of the game. And in 08, you just didn't lose as much. So when we had the Fed lowering rates, and then QE1 and QE2 and QE3, and the market rallied again, you were ahead of the game. Same thing during COVID, right? Same thing during 2022. And over time, that makes a dramatic difference. These are the same two lines, exactly the same two lines, same time frame, and this is the impact of withdrawing 5% a year. So a lot of our clients are living off the assets they accumulated, or their kids are living off the assets the parents accumulated, and they're withdrawing money every year because they have to live off of it. So if you withdraw 5%, while you're losing money, you have negative returns, right? It's very difficult to get back up to break even with those great rallies. So this is $1 million invested 25 years ago in just 60-40. It's now worth $440,000, or $1 million with the strategy of adding alternatives, you have $1.4 million, and you still withdrew 5% out of both lines. Does that make sense? So that's the idea of winning more by losing less. The other thing I'll just mention about our team, and then we can go to Q&A with David, is the people we bring on board, they all follow our values. I think the group here, our clients, have these same values. So number one, what we do is we do what's best for our clients. And then the other 6 are literally how we treat each other as people and how we work together as people. And I think this is where, when we talk to our clients, show them these values, anybody we hire, we show these values. These make a lot of sense to a lot of people. They work really well in a marriage too, if you want to use these. Number 4 is really good for the guys. You can check your ego at the door. So these are the words we live by at AlphaCore. I'm going to encourage you to ask me some questions. So David, I'm going to bring out David Stubbs, and he's going to sit down with me for a few minutes, and we'll go from there. All right. You, my friend?
Yeah. Where do you want to sit?
I'll go here.
Great. Well, thank you very much for taking everyone through that, Dick. So I want to lean into what you said just coming after the dramatic presentation we had about the impact of AI, about the role of the human and the advisor in our world. And arguably, we would argue that is as important as ever. Mm-hmm. Could you share some takeaways, some stories that maybe bring that to life?
Sure. I used to have a slide like this, and I'm going to talk about a client story for a second, but we used to talk about fees in our industry a lot. And how many of you really want to get as low fees for us as possible? There you go. There's a couple of people. We can have a Q&A about that. So we used to have a slide, and I can bring this up again, but there are certain things that are most important in people's lives. And they'll all be ranked slightly differently, but it'll be your family, your wife, your kids, your health, your religion, right? Your money. And then your education. So when you line these things up, but money is always in that kind of top 5. You might rank it lower than others depending upon who you are, but money's usually in there. And what we would always do about this, and the same thing happens with the idea of AI, is, well, when you go to get your health care for your kids, are you looking for the cheapest health care? Absolutely not. You want the best. If your kid needs the surgery, you're going to get the best surgeon. We don't care what it costs, right? If you're going to go for education, do you look for the cheapest education? No, you look for the best education, right? We can go down the line in everything, right? Same thing with a wealth advisor. This is the way we look at the world of wealth advisory. You want the best. Now, when we deliver what we think is the best, we think it's worth the fee, and it should be worth it net of our fees, but that's one way to look at it. The other thing I would say just about interactions, client-human interactions, is this is a great story of Tara, one of our team members who's phenomenal. They had her and Danny and Mike had a client that came in who had just lost her husband. So she became a widow. And she came into the office, sat down with them, and she literally didn't know where things were with her finances, right? She didn't know how to pay her mortgage. She didn't know where the assets were. She didn't know where they were custodied. She didn't know how to access her bank accounts. She didn't even know if she had home insurance, auto insurance. And so Tara sat down with her individually and asked her all these things. And she literally broke down crying because she had just lost her husband. So that was also very dramatic. On top of that, she was lost. So this is when I was talking about family office services. She sat down with her, went through it one by one, line item by line item, called and got her auto insurance, make sure it was reinstated because it actually wasn't. It had lapsed. Helped her with her mortgage, make sure it was on time. All those little things are not something you're necessarily going to give up to a computer, right? You're going to want to talk to somebody.
Exactly. It goes back to that concept in my opening of us as a co-pilot to you, in your life, no matter what happens. And there's always going to be speed bumps, there's always going to be big changes. And that's the essence of what it is to be a financial advisor. I'm conscious we're running a little behind time. I want to go straight to the audience. If there are any questions, for Dick, we've probably got 5-6 minutes here for other questions. Anyone in the audience got a question for Dick about the business, the future, anything else that he's covered? Right, I'll come back to you and talk about, what about asset protection? What about retirement? And what about the importance of planning and structuring and location? We talk a lot about these asset classes. Venture's amazing and private's amazing, but really the foundation is elsewhere.
Sure. I think a lot of people get lost because it's enticing in the investment side. We all kind of succumb to that. When you hear about boat drones and you hear about AI and all the things that AI is gonna do, you want to invest in those things, and we do too, right? We want to take advantage of those things. So we've got a team that does research on everything I mentioned earlier, 8-person team that's phenomenal. And they put together really rock solid portfolios that are customized for our families, whether that's an income need or it's liquidity needs or it's long-term needs. But if you do that and then you forget about tax planning, estate planning, asset location of where these things should best be placed in your portfolio, then you've just mitigated everything you did on the investment side. And I say the same thing about the planning side. You could do really incredible planning, but then use a rudimentary portfolio and you mitigated all the tax savings you had on the other side because you just put in a rudimentary portfolio.
Yeah. Can you define asset location for the group? Because it's a little bit of an unusual term.
Yeah. So asset location, I mean, if something's going to generate a lot of income or it's going to have a high turnover in your portfolio, it'd be better to put that in a tax protected way. So we can put it in your IRA or we can put it in a generation skipping trust. There's a lot of different ways to protect that for you. Whereas if something's going to be a longer term hold, we might be able to put that in a taxable account.
Yeah, and look, this stuff is complicated. You may be able to tell from my accent I didn't grow up here. But I've been here a long time. I'm professionally employed in finance, and I've still not fully got my arms around the 401ks versus the IRAs versus like any other 501cs. I mean, you Americans, you love all these like 3-letter, 3-word, 3-number, kind of acronyms and shortages, and of course with the state differences as well, right? That's right. Trusts have different rules. There are different different tax implications. So it is extraordinarily complicated, right? And I am marveled since I joined the firm about the depth of resources we have on the planning side and the asset location, trust and estate side. And I'm extraordinarily pleased I've got experts to do that because it seems pretty complicated from my view. Maybe just one last thing about retirement. It's obviously everyone's looking for retirement security. What kind of strategies do we have to help people through that?
Yeah, so every one of our clients will meet with a senior wealth advisor. Typically, those wealth advisors are partners of AlphaCore as well. And most of our senior wealth advisors have 20 years plus of experience in wealth advisory space. And I know a lot of you already know those advisors. So they're pulling on 10, 20, 30 years of experience to get that. But we also have experts. We have JDs, which are lawyers. We have CFPs, certified financial planners. We have CFAs, certified financial analysts. We have chartered alternative analysts. We have so many designations inside. There's a lot of knowledge inside of AlphaCore. And every advisory team has access to the entire of AlphaCore. So they're not alone, right? So when they need an expert, they pick up the phone and call that expert. They bring that expert into the room with you. And I think that's one of the strengths of AlphaCore is that we continue to add those tools and techniques. We're going to be adding in-house tax prep as well. We think that's going to be kind of the table stakes to be a good wealth advisor. So you'll be able to do that with AlphaCore, not shipping it out somewhere else. Same thing with insurance as well. So there's a lot of things that we can do to continue to build and add more services for our client base.
Great. Should we go for it?
Anybody have questions? Oh, yeah.
Yes, sir.
Yeah. So the question was, we're going to keep our relationship with Charles Schwab? Yes, so we have our clients come to us, we don't custody the assets. Typically Charles Schwab or Fidelity custodies our clients' assets. We're just the advisor over the accounts. And so we have a very good relationship with Schwab, we have a very good relationship with Fidelity. And that's the way we work. We work as a fiduciary, which means we don't earn any fees from the products we put you in. We have to put your interests before ours. And that is the only way I would set up this business. I think it's the only way to work with clients so that we can hire and fire managers as we see fit. We can offer you the services that we think are best for you without being conflicted. Okay. Any other questions?
What's your view on proposed reforms that might require private funds to provide more frequent performance and fee reporting to investors and alternatives? And how do you think this would impact your portfolio position of 30% in alternatives?
Okay, so I'll answer. Not all of our clients have alternatives, right? So some clients don't have any alternatives at all. They come to us and say, I really need liquidity and I need income and I'm very tax sensitive. So we might put a laddered muni bond portfolio into client portfolios. So we do what's appropriate for the client. Some clients have different liquidity, what I call buckets in their portfolio. So they say, I've got to have a third of my assets that have daily liquidity so I can have access to it. Another third of it could have quarterly liquidity. And then the other third might be long-term money, 7 to 10-year money. So no two clients look identical in our client base, but some have similarities, right? So they might be conservative, they might be balanced, they might have growth. And as you get into the space of I have longer term money, then we might have 20, 30% into longer term alternative strategies, private markets. And the reason you do that, and David mentioned this earlier, was you should receive an illiquidity premium in those assets. And making sure that they're priced correctly is critical. That goes to your question. Making sure you have the ability to get in and out, and we educate you on what the true liquidity is of those strategies, part of our job.
Yeah, absolutely. I would say I took people through at the end of my opening the extraordinary evolution we've seen in private markets over the last 40 years. And that has all gone one direction: more liquidity, easier access, greater transparency. The regulations are going to follow. They're going to push that along. It's only going to go one direction. I don't think that it materially changes what they're going to do in a portfolio. I think from the straight answer to you is actually not going to change very much in that regard. But we are going to see further evolution, and we're going to be on top of that, and that's probably what we do. I think we had a question up the top. This gentleman there that raised his hand. I'm not sure if we've got a mic up top, or we're just going to have to shout.
We'll hear you.
Yeah, project, sir.
Well, first of all, thank you so much. This was a great event. I didn't catch Robert Smith say how you have exposure to his company, and he said 96% of the companies he owns are private. So is that part of the alternative?
Yes. So Vista is the name of the fund firm that he manages, and they have a variety of different funds. So we allocate to Vista as one of our solutions in client portfolios. So if you were to look at kind of a cross-section of all the different types of alternatives, so let's say private equity, we might have 4 or 5 different managers we would use depending upon what you're looking for. If you look at venture capital, we might have 4 or 5 different managers. Private credit, 4 or 5 different managers. Vista is one of the bluest of blue chip names in the space. What's nice about having an independent open architecture model like ours is we don't own the manager and they don't own us, right? So if Vista is one of our great choices that we love and they've done well for our clients, but if Vista starts to suck, we will fire Vista, right? Now, I don't think that's going to happen. Pardon my French.
Technical due diligence term there from Dick. Yeah?
So to me, that's part of it. I never wanted to own the managers. I thought, as a client of AlphaCore, I want to have the advisors have the freedom to let something go if it's not working. Same thing on the stock side, right? It's the same thing. If you have a mutual fund or an ETF, or you have individual stocks and they're not doing it for you, then you should be able to fire them, right? So that's part of our independent model, and that's what we do for our clients. Mm-hmm. Yeah.
You referenced insurance as an offering. What's the scope of insurance?
Yeah. Sure. So you asked about insurance and how we work in the insurance world. So we started, as we do financial plans for clients, we'll utilize insurance as a financial planning tool. So we're not out there selling life insurance and trying to earn commissions. The way we'll use insurance as a tool in your financial plan. So imagine a family has a lot of illiquidity. Let's say they own a business, and they know that if they're let's say the patriarch, the founder of the business, their wife and their kids don't have access to liquidity because it's an illiquid private business, they might need some insurance to cover that gap until the business becomes liquid. That's just one example. There's a whole host of others, but that's how we use it. It's not an insurance agent where we're going out trying to sell life insurance.
Yeah. Yes, lady in the blue there. Yep.
Yeah. There's a lot of great information you had on opportunities. What are the risks that you're looking at in the markets, and how are you accounting for them?
Yeah, that's a good question. David?
Well, we're going to have a macro panel in a little bit, in a few minutes here, and I know there's some members on that panel that are going to be highlighting some risks. So one reason to stay around until we conclude the conference. I think we've talked a lot about AI. There's, I think, a lot of optimism from this stage about AI. No one quite knows how much it's going to deliver in terms of return on investment there. There's certainly a vast amount of capital going in. There have been moments in history where we've seen this before, and there has been some malinvestment. There's been some investment that's not quite hit the mark, and whoever's made that ends up losing money. So I think when you're in a boom like we are in right now, you need to think very carefully about how you get exposure to that boom. Yep. Anyone who just buys a stock fund right now has masses of exposure to AI at very, very high valuations through a handful of stocks. And they've been great, but will they continue to be great? Is it not better to maybe diversify your exposure, get some exposure in real estate to data centers, get some exposure to software through Vista? That would be the main one. I think also you see, it's a pretty volatile world out there. You have, I think, a world that's starting to fracture a little bit geopolitically. The markets are pricing some of that in. The most powerful move we've seen this year in many ways is the move in gold. And again, I know we're going to discuss that in a macro panel, so I'm going to hold it there. But look, we are believers in the future innovation, progress, and markets, but there are always risks. I mean, the entire point that we talked about doing more by losing less is ultimately a diversification argument to control that risk. Right.
I'll just add one more thing, because I know the fireside chat, which is coming up next, is usually the most lively chat. You're going to love it. But I'll say this. We have a lot of clients of ours who have been very successful in concentrated equity positions, and they've done extremely well. But they don't want to rip the Band-Aid off and sell it because they're going to have a huge capital gain to deal with, right? Or they're like, if I sell now, I'm going to miss out on the next run. And so there's this discussion we have with our clients. Okay, we've got ways for you to save on taxes, long, short, tax loss harvesting. There's options you can do around things. There's exchange funds. We have 3 or 4 interesting, innovative ways to mitigate taxes you might have to pay by helping diversify. But also, we have to also talk about what are you looking for at a certain stage, right? Because has everybody seen Wall Street? I'm going to bring up a bunch of 80s movies. So Wall Street, if you think Gordon Gekko, he said pigs get slaughtered, right? And that is an adage that we have to sometimes talk to our clients about. We had a client, this is back in 2019, who was 82 years old, and she used to buy leaps, which are levered versions of stock. So 4 times levered on stocks. She was 4 times levered on Apple. She had $66 million in Apple. And then when you're 4 times levered and Apple goes down 20%, you go down 80%. So we begged her to sell some of these leaps, and she wouldn't do it. She just wouldn't do it. So when the rate range changed and Apple went down, she freaked out, right? She called us, and we said, okay, well, now we have to come up with a plan to get you. So for us, a lot of it is psychology. We're trying to talk to our clients. Sometimes we have great tax solutions, so we can talk to all the clients about that. Sometimes we say, don't let the tax tail wag the dog, right? Let's think about your life. Let's think about who you are. Let's think about your kids, your husband, your wife. Those are things that are more important a lot than just the dollars and cents.
Right, we are close to time. You want to say a little word about this?
Yes, so this is the entire team. I'll show you, this is our new balcony. But I also we're going to be giving away the Gibson guitar. So I want to bring up Trevor Callan, who's a managing partner here. So give him a round of applause. I'm going to bring up Kirk Strawn as well.